Good morning, everyone, and welcome to the European crossover webinar. And we have seen quite the sell-off in equities, as you can go and see here that the SPOOs really came off. We had looked initially as that 42.35 is 127% extension, and the market actually had got up to, what was it, 42.38. Looked like it would go further, but it ran out of gas there, and we saw quite the fall yesterday. As we've seen some pretty heavy liquidation towards the end of the session, and boy, did we break them hard, and we broke them even further into Asia as we went past. We got past 41.80, but once we broke that opened the door for us to continue to move lower. And then on the downside, which I think we had bias chart support, which was 41.52, but you can see here we dipped down here to challenge at 41.48. Before just a slight rebound, and in the Nasdaq, per our analysis, we were looking for a move between 13,150, 186, and that's exactly where we went to, 13,150. Although I didn't think it was going to come back this quick, and certainly not pre the U.S. Open, but that's exactly where we've moved down here. Take a look at some of the other markets. Certainly at the time, Bitcoin was impacted initially, but it's actually come back. It's actually holding up relatively well despite the sell-off we saw in risk. And then take a look here with gold. Gold continues to hold up very, very well. Here. You're wondering if that quote is correct. Hold on. Yeah, it is. It just seems like it's been so quiet. Boy, it has been quiet. Crude initially had sold off yesterday a little bit with risk. You can see right here we came down. We came right back up a little bit, closed around 65, but we dipped back towards that 64.29 here. And looking with the euro, it's still holding up close to its highs. I mean, it still remains on a buy. We've come back in a little bit into support, but still holding up relatively well. And the cable's holding up very well here. Taking a look at the economic data, we do have German zoo numbers coming up at the top of this next hour. They're looking for 41.3 for current conditions. Prior was 48.8. And economic sentiment, they're looking for 72 versus a 70. So they're looking for a dip. And further on as we come into the States, we'll be looking at ISM New York business conditions at 9:45 Eastern, and the JOLTS jobs opening at 10 a.m. Eastern. We do have a couple of Fed speakers today, Williams and Brainard. Williams will be speaking at 10:30 a.m. Eastern, and Brainard at noon. But as I mentioned, boy, what quite the sell-off that we saw here in equities, and we did go on, as I mentioned, come back down here. You can see here with the S&Ps coming back to retest this 41.48 area here. Looks like we might get a little bit of a bounce. We got a bounce initially, and you can see where they ran out of gas at this 41.67. That's been key before. They've rolled right back down the hill, and we're back here at the 41.48, or almost there. So the pressure continues. With that, we'll go on and take a look at the bias chart and get started on the analysis. And starting off here with the euro. So the euro posted a mild negative close on Monday, despite the negative move in equities. The pair remains bullish. Resistance will be 21.51 with support at 20.96. And as I said, this was just a mild pullback. And actually, I'm even surprised we haven't seen a further pullback considering the continued sell-off we've seen in equities. But mild is what it's been. We're looking at 20.96 on support. And 21.51. And on to cable. Now, cable pushed beyond the secondary resistance on Monday, which was 41.40, closing just below that. The pair remains bullish. Resistance on Tuesday will be 41.80 with support at 40.72. Now, we had our initial support, which was the 40.80 yesterday, and we had as our bias chart resistance, and we had the secondary resistance. And like I said, we pushed even beyond that. We got to that level, and then we closed just a hair under it. But as I mentioned, support will be 40.72 with resistance at 41.80. Now let's go move into the Aussie dollar. Now the Aussie dollar posted a near gravestone doji. You can see right here. As equities pare back, the body is a tad bigger than the standard formation, but the outcome has a bearish notation. Resistance on Tuesday will be 78.77 with support at 78.02. You can see we're in a really tight range today. And we're going to move on to the dollar yen. Now, the dollar yen posted an insignificant trading day, despite the range, despite the pullback that we saw in equities. Resistance for Tuesday will be 9.34 with support at 8.28. And still we're in a fairly tight range here. And that almost, at least on the upside, mirrors what we already had. 9.34. Only difference is it will be 8.28. And onto the cash dollar index. Now, the dollar index posted a minor positive close despite the sell-off in equities. Resistance will be 90.67 and with support at 89.70. So essentially, it's close to what we already had. That 89.70 still remains key, and I'm surprised we didn't get much of a push, higher. So it's a little bit disappointing for the dollar. So 89.70 remains. The only difference is that this drops down to 90.67. And of course remains bearish. With that, we're going to move into Bitcoin. Okay, and Irina wanted to go in and take a look a little bit more at your dollar. We'll jump back into your dollar since we're just finishing up on the currency. So let's go back to your dollar. Bear with me. So if here's the problem with euro, it's still, and I think I had even notated that on the comments. It's still bullish. Okay, now if you're our bias chart resistance is going to be 21.51. We're just about there right now. If you're hell bent to sell euro, and I mean that in a in a good way, like you're just determined, or you feel that no, this is it. I think this is as far as it can go. Once again, this is where I have this 21.59. Now I have the resistance coming up a shade before that, but the key thing would be right here. I'll even expand this. What you don't want to see is you don't want to see this market close above that close. So we go to this close right there. That's 21.77. You definitely don't want the market, and you can see that's exactly where the market rallied to yesterday. So let's come here. It's going to be right there, 21.77. Well, so you definitely don't want this market to go in and close above that. Like I said, today's bias chart support resistance is 21.51 because I'm not sure that we'd come right back up to the same level of 21.59. So if you're trying to take pot shots against it, you probably want to start out at 21.51. But you definitely, the market is still bullish. And that's what I'm saying. This is, considering the sell-off we saw, I would have expected a more bigger pullback in euro. So that shows it's still bullish. I mean, still stoutly bullish. Look, we didn't even take out this low right here. This is important here. You see that right there, this close of this body? That's 21.20 for 24. So we didn't even close. We closed above that. You see that? Actually, we closed maybe just a couple of pips above it, but nonetheless, we closed above it. You would have thought the market would pull back. So that's why it's still keeping its bullish retention. And so we're still looking pretty solid. Uh, you probably best to let the market test itself to give you that tip that it now wants to move lower. But if you're thinking this is a good area, well, then you could start at 21.51, but you definitely don't want to see this market close below 21.77. So that actually gives you a pretty good risk as far as what you want to do or you don't want it to get to. Now looking at Bitcoin. Now, Bitcoin succumbed to sympathy selling in accordance with the move in equities going sub 54,000 yesterday. And right here, you can see this move took a sub 54. The market has rebounded post equity action. Resistance on Tuesday will be 57,255 with support at 54,283. And 57,255 on the upside. You can see the dip we saw here gave it this little bit of scare just below 54. Considering look how we were doing really well at the beginning of the day, and we came apart. Now equities are on the low. Wow, we're at 41.46, so we're actually making new lows here in equity. See that? But Bitcoin's still holding it really well. We have really come undone here. Now let's go and move into the S&Ps. Speaking of which, why is 6 doing that? There we go. So look at this. We're making new lows right now. Now, I actually picked it up in Asia. I think it's like 41.51 or so, and rode it for a little bit up in here. But holy smokes! Look, we failed at the 41.67, and look, here we are pressing new lows. Actually, before the show, I was almost going to pick it up again, and we did move up to things like 41.56, but I would not have expected this thing to turn around and come and make new lows. That is surprising right here. But anyway, nonetheless, S&P pulled back in grand fashion from the 127% extension. We talked about that at 42.35. Been here, and that 127% extension. Using and taking out key levels of 42.14, 42.04, 41.92, and most importantly, 41.80. The close below 41.80 now puts it in place as a short-term high. The index would need a daily close above 42.35 to negate the negative setup. Now that seems a little bit, stretch to say, oh, it'd have to go all the way up. Now, obviously, it's even fallen up much further, but I'm saying even when it was down here, because we got below 41.80, that really turned it negative. So on a very short-term basis, 41.95, not even 42.04, 42.14, a close above that might have put the brakes on it, at least temporarily. But we would need a daily close above 42.35 to put it right back in trajectory. And it's not, obviously not getting there. It certainly doesn't look like it. So the resistance will be 41.97 with support at 41.67 and followed by 41.52. We're even pressing below that now. Okay, so this is unbelievable that it's pushing this far. Right now, this is going to be, it's going to be 41.38. That's this area right here. So, at this point now, it's going to be 41.38. I'd be pretty surprised if it gets down that low, but nonetheless, we've already broken so far. What's another 7 handles? And that'd be the challenge, 41.38. Kind of like that 41.42 right before that. We've talked about that level before. 41.38 would be a push, and maybe that's what they're trying to do right now is go for the push. And on the upside, it's going to be the 41.67. Let's go move into the Nasdaq. Boy, look at that pretty good sell-off right in here. And let's take a look at that 2-hour chart. We talked about that. And we're back here testing this. So the NASDAQ closed below the level of 13,354, placing the index with the short-term top. The index will now be eyeing a move to 13,150, and that's exactly what we've gone to, although I didn't think it was going to happen. Thought it could happen today, but not today like in pre-US Open. 13,150 with interim target support at 13,245. Resistance will be 1342/63. Well, obviously that's different now. So once again, we did meet that target already, and I'll stick with that. 13,150. Looks like it might be divergent just a hair from the from S&P. So we did get to the 13,150, which we were looking at, but I didn't think we were going to get there. I actually don't even sure we're going to get there today, much less today pre-US Open. And resistance is going to be let's go right there, 13,268. On to the gold market. Gold sure is trading quiet though. So gold remained positive on Monday, despite the sell-off in equities and Bitcoin. Resistance remains 1850, while targeting on a short-term basis of 1877. Support remains 1814, followed by 1803. So there's no change from yesterday's analysis. You can see right here. And we came pretty close to 1850. I think we got up to 1846. We're trading at 1835 right now. But no changes here. 1814 on the downside, 1850, and the market will be targeting or is targeting 1877 on a short-term basis. And on to the crude oil. So West Texas Intermediate closed just below $65, preceding a test of $64 as risk came under pressure yesterday. Resistance remained 65 with support at 64.29. Well, you can see we're pressing just below the 64.29 at the moment, right here. And take a look at the S&Ps. They're actually trying to hold here now after they spook some people. This looks pretty good. I guess on a very short-term basis, if we can hold this area, I was going to say a half hour, but if we can close, if we can defend this on a 2-hour basis, don't want to be jumping all over the place, but here's the spooks. If we can defend that 41.48 with the close, which will be in another hour and a half, then we should have a short-term bottom, and that will allow a test back to 41.67. But anyway, getting back to crude oil, you can see here, I think they've been spooked a bit. They're just a little bit below the 64.29. You can see right there. We'll just go move it just a hair bit below, which you can see right there, that close and that body right there. You see this doji, almost like a medium-legged doji. Let's call that 64.21. So we will put it for 64.21. And we'll go and keep the resistance here at 65.50. And with that, that's the bias chart for today. As I said, keeping an eye on these S&Ps. If we can close the next 2 hour bar and defend this 41.48, then that should, after we took out the low here, that should allow this market to go on and revisit 141.67 again. Might be a little bit of a tough road to hoe, but that'll be what we'll be looking at. Here's the bias chart. We'll go on and get that posted. And thanks for joining us here on the European crossover webinar, and we will see you in the chat room.